Nothing concrete because it's not acting right. And what do I mean by that? What's up, everybody? Hope you had a great trading day. It was a wonky one, and it left us feeling, a little uncertain. There's some really good shorts out there, and there's some great longs as well. I'm going to focus on the short-term moves that I think are going to happen tomorrow. Now, we have 5 Fed speakers tomorrow. Okay, so just be aware of that. You have 5 Fed speakers tomorrow. So let's just jump right into it. China has come out and said year-over-year sales and shipments rather are down substantially. So not sales, shipments are down substantially. So that's going to hurt Apple. Now that could be based upon the shutdowns over and over again, supply constraints, but nonetheless, it's going to affect the stock. Now I just have the 50 and the 200 in here. But if you start looking at what's going on and we start putting all the indicators in and we overlay this with earnings, okay, we're unable to even get above the 5-day. And if we take a look at the NASDAQ, that is above the 5-day, and so is the SPY. Stay to the end because we're going to go through all the indexes, and I really want to talk about the bond market because you're going to have to understand this portion of it for any of these trades to really work tomorrow. And again, what we go over today are short-term trades. But what we're setting up here is we're setting up for a short, and there's very little doubt about that now. We've broken out. We're still oversold grossly. We can see that with where we're at, on the RSI. But look, try to rally over, can't. Gets to the 5, rejection. Okay, long-legged doji. Long-legged doji signifies what? Uncertainty. Very simple trade. All you're looking to do, and this has a low relative strength to the market. How do we know it has a low relative strength? This is the quickest way to check low relative strength. Is the S&P above the 5-day? It is. Okay. Go look at the XLK, which makes up 21% of that. Is the XLK above the 5-day? It is. Where's Apple? Below the 5-day. Apple is below the industry, and it is below the index. Simple enough, right? Very easy way to determine relative strength. So if I break this 144.19, I don't see any reason why I'm not getting back down to this 137 level. I think that's where you're heading. I think you have to do a retest of these. I would have liked to have seen this have follow through today. I would have liked to seen a lot of things today that didn't happen. Airbnb. Now, this was one that we were short and then it rallied against us and came right back down. I think it's important to understand this and talk about this, okay? So you can see that we're below every single moving average. We got above the 5-day and now this is where we're sitting. And I just want to click off of this and we're going to click off the indicators and I just want to focus on this one key metric. See where we closed? See where the other closes were? Very simply, that tells you everything you need to know. You had more sellers today. See how wicks are price rejection, and we know that? You had more sellers today that got rid of all those buyers. It's that simple. Don't overcomplicate it. And if you go back and you look here and you load in all the data, which is what I'm doing right here, just so you can understand, there's no more data left. What does that mean? That means that this is the all-time lowest close that this ever had. We got right to this level. We rejected that level, 121.69. These levels, when you start out, are so important that you remember where these are when these IPO, okay? This is one of the last IPOs of 2020 or 2021, I think. When did we go? 2020, that did not really break yet, like the hoods or the coins. And I understand it's a different field, doesn't matter. There's no earnings here, right? And that's an issue. Now, people are they're not waiting for it to earn $1 a share anymore, right? You just took a loss of 3 cents. Nobody cares that they're doing a scholarship fund. They want their company to make money. So you have an H set up here. All you have to do is see a lower low, and that's it. 113.25, and this trades back on. These little setups are working perfectly. Coin was one that was in the top 10 from this past week. I'd recommend that you watch that. I'll actually link that at the end of this because it gets into energy very specifically. So if you're interested in energy, which we did very well in the trading room today on those, watch that video. I'm not going to review all those energy trades, but they all look like they're going to go. And I'll link that at the end. They're all hitting highs. Now, if you see what's going on right here, see this little flip? See how you broke? Okay, that was our level. This is exactly what we talked about. I think we said 65.50. So once you broke 65.50, that was it. It was risk on, and that was a pretty simple trade. Wasn't that hard at all. Broke, you're down. This is not done. This is really simple to look at now. Now we have this doji. We made a decision. Take the high of this, 68.08, and then just look at executing again on this if it breaks 60.50. There's very little reason for these stocks not to go back to this level. It's not like we're in a position where we're going to watch Bitcoin all of a sudden miraculously go up. Just the exact opposite. We're seeing signs of it actually breaking. Let's take a look at that for a second, and then we'll get back to some of the other names, but let's just talk about this. This is a bear flag, and since we've been in this bear flag and broken, you have 1, 2, 3, 4, 5, 6 closes right under it. You cannot get above this. This is setting you up to H. So as long as that continues, people are not going to be going out there opening up Coinbase accounts. I understand that they're leaning more towards institutions. If institutions are bleeding from equities, they don't need to own crypto right now and bleed from those as well. So they have a real issue on their hands, and their last conference call was a dumpster fire, to say the least. So 2 more names I want to go through. So what you're seeing happen here, and what I'm looking for is I'm looking for this to break above this level. I'm looking for a higher high, and I have yet to get it. Okay, but when I get it, I will be looking at buying the bonds. I want to buy the 20-year bond. The problem with it is during an inflationary time, these bonds sell down just like equities. So when you're going through a period of inflation, even though inflation has peaked, of course it's peaked. It was 8.5%. Peaking's no big deal. You still have it. It didn't go away just because it peaked. Just because it didn't get worse doesn't make it better. So once we get to a position where we start seeing them cut into it, but where you're at right now, they're just selling them down. Okay, they're just selling them down. So I'm looking for this 118.90 level. Just watch this tomorrow. Again, you have 5 Fed speakers tomorrow. We're going to go over the 10-year in a moment. Let's talk about Tesla and why this is on the list. So we tried a long the other day. We did okay with the long. Came in today long. Just did not work. Okay, we gave it some time. Did not work. Batted it around a couple times. Did okay with some simple, very day trades on it, but nothing concrete because it's not acting right. And what do I mean by that? Meaning every time it breaks down, all they're doing, like here, they're just rallying you right back up. So you really have to understand your reversal trades, right? Like this is your bear flag. So in other words, like the best profitable trade I had on this today was this. So in the trading room, I said, oh, there's a bearish engulfing right here. Start looking at these kinds of trades because this is what they're doing to us. So you see this bear flag? So they set you up with a bear flag. So you're like, oh, it's a bear flag. It's going to break. And then it breaks right here. And then they pull the flim flam and they take us up. Then they pop the over, right? They pop us over this bear flag. Then they make you want to wait for the confirmation. So then they give you the confirmation, right? They give you 145.87 or 745.87. Right? And over here you have 744.88. So you're thinking to yourself, oh, I'm okay. I made a higher high. I'm entering it. I'm over the open. I'm good. I'm at least going to go to here so I'll be able to get up and in. And then bam, you get the bearish engulfing, right? That pattern right there. You should be able to see that pattern, that bearish engulfing right there. Breaks down, boom. That was the easiest trade. Look what happens when it hits a new low. Oh, this time it's really going to break down. What's it do? Pulls the flim flam, runs right back up to the breakout of the bearish engulfing and rolls again, right? And everybody knows that if you watch those candlestick videos, I'll link that at the end as well. That is a bearish hook reversal. So you can see how you could have made money off of that trade as well. Doesn't matter if you're not in it. They're going to give you another one tomorrow. Look, if you take this out tomorrow, okay, and I think it's really important to just understand this, to start taking a look at these closes, right? Because that's where you're at. That's the issue. So this is a new closing low, even though you're sitting on this support line right here. That's a new closing low. You have not closed that low this year. So what does that mean? It means that you have more sellers. It means you've cleared these people out. So what are we going to do about that? Well, what we're going to do about that is we're just going to see if we can take out that low tomorrow. If we take out that low tomorrow, you know, this can go back down to that 678, 675 level fairly quickly. So just look at this from on the short side. For me, that's how I'm going to be looking at it. I'm going to show you why in a minute. SARC rallies up, pulls back, but this is exactly what you're looking for. It's throw these indicators in. See what you're at right here. Here's your 21, your 50. You don't have a 200 yet. But the RSI fits perfectly, even though it's overbought. It's still doing what it needs to do, hitting higher highs. So we're seeing the selling stop. 2 days of selling. Couldn't have a third follow-through day. So now here we are. Opens, right at 64, back to 68. And here we go. So this is setting up again. If you make a higher high tomorrow, forget the 5. I'm not worried about the 5 and the 8. Get a higher high tomorrow, and you might want to look at the 68.10. Now let's get into these indexes and what's going on. So here we are. Okay, and let's get rid of the 21, 50, and 200 for a minute. And let's get rid of the RSI so we're not focused on anything else but the 5 and the 8. So we're looking for short-term signals. Here's a short-term signal right here. 5 and the 8, and you're above it for 2 days in a row, and then the stock continues to move. Above the 5 for 1 day, above the 5 for 1 day, 1 day, 1 day. I'm not going to keep repeating it. Guess what you did? You're above the 5 for 2 days here. So this is the only time we've been above the 5-day moving average for 2 days in a row since back here. And this is more important than the SPY to me, because big tech's what's going to move the market right now. If it keeps selling down, we're going to keep going down, barring energy trades. So where you're at right now is you have this little bar set up perfectly right here. Well, what does that mean? You need to watch this bar like a hawk tomorrow. Now, we've did a really good job today of holding 297. Drill this down on a 15-minute. You can see all my lines here. Let's get rid of them. But this is us hitting that 5-day all day long and holding, okay? But they're doing the same thing where they're breaking this out like they're going to go. Then they give us the higher high, and then they reverse. And they've been doing this over and over again, triggering. This is where people will buy. Like if you are a breakout trader, you're looking at these on short-term time frames to buy them, and they're just not working. They're luring you in, and they're pulling the flim-flam. And that's exactly what you're dealing with right now. So you need to be careful, but watch 297 tomorrow, because if you break 297, this can get worse, and you have 5 Fed speakers tomorrow. So that can happen. Now, in regards to the 10-year bond, you rallied up, came back down, tried to rally, couldn't today. If we can get below 281 tomorrow, that would be great. That would be bullish. And then you want to make sure that you can get above 272. If people see that their hedges are going to work, they're going to put on hedges, and then they'll be more comfortable buying, they'll be more comfortable buying equities because the hedges are working. In regards to the VIX, this is exactly what we thought we would see, where we're going to sell down. This is why your option trades aren't working, because the implied volatility is coming out of them. So that's why you're having these big moves in stocks and you're not making a lot of money, because the implied vol is drying up. Just be aware of that. Finally, at the end of this video, I'm going to link this so you can look at all these energy trades, but it'll be in the top 10 stocks video. But this is perfect. This doesn't get any better on energy. Crude was at $1.14, I think, at the close today. This is the sector to be in if you're looking for long ideas. That's it, everybody. Have a great evening and trade to win.